Hello and welcome to another update video about ADA. First of all, just a quick look at the weekly chart so that you know where we actually stand on the ADA chart. This move up here occurred between 2020 and 2021, the September 21 highs, which I count as a wave 1. You can debate if the wave 1 did sit here or here. That doesn't make so much difference. It will change and impact the lower degree wave count, but that's not so important right now. What is important to understand is that we are currently still expecting another bear market low, and that we're moving currently in a potential Elliott wave triangle that we've been tracking now for many weeks, probably months. So an Elliott wave triangle consists of 5 waves, yeah. So this is the triangle we're tracking at the moment, and it doesn't need to be a triangle. It could also be an ending diagonal. For example, there's a potential that we say this here was a wave 1, this was a wave 2, this was a wave 3, which is currently unfolding actually, then a 4 and a 5, and we head down lower to new bear market lows. But also in the Elliott wave triangle, where we're counting A wave, B wave, C wave, D wave, and another lower high in an E wave, would then complete the triangle and lead to another bear market low. So at the moment, in both main scenarios that we are observing, we are watching for another bear market low. It takes a break above around about 38 cents to unlock something more bullish, which is a key resistance level. But until we get there or break above it, the focus is on the downside, either in a triangle, which would delay the sell-off a little bit, or in a more direct fashion. And a break below this red support line, so below the 22-cent level, would basically be a confirmation that we're heading down to new bear market lows directly, because that would invalidate any further considerations about the Elliott wave triangle. Currently, however, and this is now the detailed look in the triangle, we're basically currently at the end of the triangle, very much the end, and we are watching if the price can develop one more lower high in an E wave. So this E wave here would be the last wave of the triangle, and it would most likely, at least that's what we can make of this at the moment, if we try to identify a structure, which is challenging, we can say that this could be a WXY structure. So the Y wave could reach the area between 30 and 34 cents. We've been discussing that now for several weeks. I highlighted to you it's not high confidence, but so far the support didn't break, so we still give it a chance. And over the week, similar to Bitcoin, we identified here a potential structure that would allow for further increasing prices, which also happened, but it's not sustainable at the moment, doesn't sustain yet. So the idea is that as long as support is holding, micro support is at 24 cents, yeah, this move up can happen. So I shared with you yesterday, either we are already directly in the third wave, or this wave 2 is still in the making, but that the key support against which we can focus on higher in the very short term, it's not high probability, right? But we can still focus on higher in this microstructure we're tracking. That support is 24 cents. So that didn't break. So everything's still possible when we talk about further upside. Yeah, this move up is clearly 3 waves, okay? So I'm leaning towards that the wave 2 never finished, and might either it formed the running flat, which is possible. So in a running flat, the C wave doesn't need to go below the A wave. If the B wave overshoots, that's possible. So it might be this structure in which ADA decided to transform this structure into a running flat structure, and that it goes up from here in a third wave. Now, again, it's not high confidence, I have to say, but the relevant support against which we can measure our risk, if we were trading that on the long side, which I don't think is a good idea, because it just doesn't align with Bitcoin at the moment, and it also doesn't really it doesn't have the larger degree trend behind it. We don't have a clear bottoming structure medium term, so I have little hope that this is really a lasting low. If otherwise it would make sense, but that for me at the moment just looks potentially like a corrective rally in an E wave structure. So it's typically very choppy, and as you can see here, and it doesn't have the larger degree trend behind it, as I said many times in the videos here. So yeah, we track this, potentially a low wave 2 low in. I think we will know more maybe next week. I'm not sure how much is going to happen over the weekend. This is not really a confident structure yet, especially as it didn't break above the Tuesday high yet. So a breakout point would be here. And then we might even have a very ugly inverse head and shoulders here. So neckline 25.5 cents. So that would be resistance. I would pay attention to that 25.5 cent level, which is the B wave high. That would be a breakout point, and it could take the third wave here in this structure, in this micro structure we're tracking, potentially to, I think I highlighted that yesterday, around 27 cents. So that's my update about ADA. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.